Welcome back to Morning Trade Live. It's time for Inside Out, the big subject this week. Well, one of them, of course, is going to be earnings. Shifting gears from some of the social media stuff, but also we've got Tesla, we've got energy companies, we've got a lot, so let's get to it. I want to bring in Kevin Hanks, who's joining us in studio, as well as Mike Pisani. He's the CEO of SmartOptionTrading.com. Welcome back, Mr. Pisani. So tell us, what's the smart option trade as we get into a week with the likes of Tesla, Transocean, a little something for everyone?
Hey, Oliver, nice to be back. I'm short Facebook, and I'm just looking at the corner of my eye. That looks like it's working kind of nicely here this morning, the way it's going down.
After the 20% drop, Mike, what comes next then for Facebook? What's the catalyst?
I just think you got to pass back with the Cambridge Analytics stuff earlier this year, and this earnings report was horrible, right? Whenever you come out on the call and you say you see your revenue growth slowing to these high single digits, that's a red flag in that type of industry. So I think there's downside to 160 here. There's a gap to fill below here, and I think they're going to go fill that, and then we'll see how it reacts from there.
So, Mike, how are you doing that in terms of the structure of the trade? Give us an idea how you want to get exposed to Facebook after a move like that. I imagine hedging's a little bit more pricey now.
It was. I just went some cheap options. I took the August 160s. I said, let it come to me. I'm going to take some cheap, way out of the money puts with the idea that if it gets to that 160, these things will return 3 to 4 times the initial investment.
The reaction is a little bit more extreme in Facebook. My question, Mike, is what's the duration of this trade? Because I imagine as we go into further earnings, their bar is going to be a little bit lower, like we saw with CAT today.
For me and Facebook, this trade is over this week likely. Just looking at it, either it's going to go into that gap or I'm going to close it out, take what profits I have, and move on this week. CAT's interesting to me today too, right? Because they said everything right so far, but the call doesn't start till 11. And I think a couple times ago I was on, and then we talked about that comment by the CEO, high watermark, right? But since then, they've raised guidance again, they beat again, they did a $10 billion buyback today, but yet the stock's selling off here right away on the open. So obviously there's some concerns about that call, which is not till 11. And remember, last time this CEO spoke, he sold not just off CAT, he sold the whole market off.
Yeah. So, Kevin, I think that's a good point to bring up that we've been talking about this morning. Caterpillar right now, it's a little bit on the upside, but to Mike's point, it's been fluctuating this morning. Maybe folks aren't quite buying it given just how much the conference call made things shaky. Let's talk about another sector here, Mike, that's been pretty interesting in 2018. A lot of folks thought energy was going to be a continued rally with the oil space. It's been mixed. Halliburton got sold off pretty hard after their earnings, but Transocean this morning's on the upside. What are you looking at here within the space?
You know, rig is really a sign of how the drillers are doing, right? How they're doing out there in the water. And this name has been beaten up for the last better part of the last decade. And it's starting to make a comeback here. So I think if you see them starting to do some expansion, drilling some new areas, bringing more rigs online, I think this name could really surprise. It's got to me, it has a low floor and a high ceiling on at this point. And I'm looking for a move back up through 15 and then maybe later on to 20, especially if some of these catalysts we're hearing about in oil come true. And the one thing we're hearing about in oil is that supply is outpacing demand, and they're not bringing enough demand online to meet that, which is going to create problems as we go into the second half of this year and next year. So if that starts to take place, it's not the energy companies like ExxonMobil who are going to benefit. It's these drillers and the explorers that are really going to benefit. And rig's just a cheap way to play that.
Kevin, the stock is up 4% this morning, but oil's also making a push above 70 bucks. I think Mike's got a pretty interesting point here about supply reaching demand, because for all the talk about the shale and the Permian, right now, at least what we saw from Exxon and Halliburton, is it's tough to operate in the midstream there. Maybe it's now time to just look back to some of the traditional stuff where they're still pumping away in the water. Mike, is this an earnings swing or a longer-term rebound play?
I have comment on it, and I'm just sitting in this thing, and I'm going to hold this thing through the year.
Yeah. Mike, let's talk some of the exciting stuff before we let you go. Not to say that drilling offshore isn't a good old-fashioned time, but we've got Tesla rounding out some of the growth story, of course, that now has been showing investors is a little bit more shaky. Some weak hands in Facebook showed up. How important is it to look at Tesla, even if you're not playing the stock, Mike, but as a sort of read-through on the nature of this market right now?
Well, we just brought up the idea of the conference call being so important. I mean, is anybody not going to be listening to this conference call by Elon Musk just for the sheer entertainment value of what may come out after the last one?
That's a pretty fair question.
Honestly, I think there's a lot of bearish talk about this. If you watch the options market lately, there's been a lot of way out of the money put buying on it. January 50s, August 50s, September 50s, 100s. So there are some big funds out there looking for a big move down on this thing. And the real issue is becoming is that everybody believes they're running out of cash and they need to do a secondary, and that's going to be the catalyst. So if they hit here, and let's say they have good earnings and they hit their delivery numbers, it looks great, and they pop, I think you're going to see a quick secondary offering, and that could drive the stock down here at this point. So this is a very dangerous time to be in the stock, I think, and I'm not really sure where it goes from here.